And here is one story you need to hear before you head out the door.
This morning, Texas is taking care of business. After raising $120 million, Houston native James Lee is preparing to launch the Texas Stock Exchange. We're told he plans to register later this year with headquarters in Dallas. Texas is already a leader in business with 52 of the Fortune 500 companies based here.
Listen, for one, it's going to completely transform Dallas, Texas. Dallas, Texas is already a massive financial center, but when you put a stock exchange in there, that will make it really the financial heartbeat of the entire country.
The New York Stock Exchange announced plans to launch New York Stock Exchange Texas.
It will be a fully electronic equities exchange headquartered in Dallas. The NYSE president calling Texas a market leader in fostering a pro-business atmosphere. It's reincorporating the NYSE Chicago with the move to the Lone Star State. Texas has the largest number of NYSE listings, more than any other state. Governor Greg Abbott saying Texas will now become the financial capital of America.
Man, Texas is flexing on the entire country. You have the Texas Stock Exchange launching in 2026. Also, you actually have the New York Stock Exchange rebranding and moving from Chicago down to Dallas and rebranding itself as the New York Stock Exchange Texas. The competition is going to be fierce and good for business. Now, how is this going to impact not only the local Dallas market in real estate and business, but also national competition in real estate and business? Man, we're going to dive into this thing. Let's get into this thing. You see that thing, baby? It's going to be fun. Let's go.
Yeah, man, that's crazy. 40 days, God, I've been Swayze. Grew the beard out, that ain't shady. That's a bird, man, I ain't baby. Talking hope out, that's so crazy. How I got a shot, raise the bean sprout up, put a crown up on her head so the boys seeing, no, that's a lady.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, y'all? It's your partners Dale and Cliff back in the saddle again for another edition of Real Estate Friday, live at 5 p.m. CST. Cliff, what's going on, baby? How you doing, big time?
Man, doing good, man. So just staying busy, man, trying to get the business rolling.
Yes, sir. You know, me as well. It's been an extremely busy day on this Valentine's Day. So happy Valentine's Day to everybody. And Cliff, you know, we got to ask the question, Doc. Did we get the bag?
Yes, sir. You know we got the bag this week.
Yes, sir. We got the bag. Nice big bag coming as well, guys. Man, Cliff, man, it is Valentine's Day, so we gotta jump in this because we got wives and families we gotta get to, yo.
right.
So let's dive in this. Cliff, man, real quick, you know how we do it every single time before we jump into our topic today. Cliff, man, what is the current market analysis, man? Because you went somewhere else today outside of Dallas, man. What you seeing not only in Dallas but in the state of Texas? What you seeing?
Yeah, man. Had to do a long driving out to commercial building. Actually, it's an event center.
Mm-hmm.
So starting to understand the fundamentals and everything about valuing those type of properties. But this week, I'm starting to see really across the board, the market's just going flat to slightly down a little bit. Yeah. I'm seeing a little bit more properties listed on the market.
Yeah.
They're sitting right now. So it's not the greatest time to if you want to list a property, especially in Dallas. It's basically soft. It's very soft. When you have inflation combined with, people haven't been getting raises as much to keep up with the inflation rate.
Yeah.
There's just not a lot of buyers out there because the value of the homes have gotten so high that your average buyer can't afford it.
Yes, sir, man. I agree with that 100%. I'm seeing that also in the local and national market. We're going to talk about a specific marketplace in here in a second, guys. That's not in Texas. It's going to surprise you of what's going on there, guys. But I'm seeing the same thing, guys. In my opinion, this is actually a really good time to really buy real estate at a discount price point because let's keep 100. It is a seller's market. Right, I'm sorry. Forgive me. A buyer's market right now. Sellers are staying on properties for a long period of time, depending upon the price point. Even when it comes to those lower tiered homes, like you were saying last week, for anywhere from $200,000 to $350,000, those will stand on the market a lot longer. Would that be correct, Cliff?
Yeah. I mean, the lower tiers are always going to move faster. It's just
Yes.
a price thing.
Yeah.
You know, you sell the dollar store and you got, luxury items like Gucci. Gucci going to sit a
Yeah.
little bit, but when you get
It
paid,
is.
it's going to be big.
For sure. For sure.
Dollar store going to sell like crazy.
It is.
So it's the
It
same
is.
thing. I'm seeing the same thing here.
Yeah.
The lower tier, they're still selling.
Yeah.
They're holding the value better. But
Yeah.
once you crack about 400,
Yeah.
starting to see a slight dip come back. Like what I'm starting to see more is people starting to take concessions. And
Yeah.
I'm seeing concessions 20,000 is not crazy.
Yeah.
I'm seeing that.
Mm-hmm. Yeah. So you're seeing a lot of seller concessions just to get the property sold, guys. You don't see that when you see a property listed. Only you see that on a HUD or an outer statement at the closing, right? And in California, a lot of buyers, Cliff, they are actually withdrawing their offers from coming out of escrow because the insurance is too damn high. Because of what's going on there with the wildfires, man. I mean, California's going crazy about banning insurance companies from withdrawing insurance at the end of the tenure, man, forcing these people to build low-income homes in Pacific Palisades. I mean, they've gone crazy post this wildfire issue in California. But it's California. What do you expect? It is what it is. They crazy out there in California.
Man, it's wild what they doing, man. We already know. We talked about on this many times. What they doing in California is I can't even explain it. I think we talked about last week with the zoning where you can't even buy your own house back. Is wild.
Ridiculous. It's just wild, man. Praying for California. But guys, let's dive into the topic, man. Y'all here for this right here. Y'all here for this. Yo, Cliff, man. Dallas is becoming the new financial capital of the nation. Damn, and I say the world. Man, the New York Stock Exchange is leaving Chicago and rebranding to NYSE Texas at the exact same time that the state of Texas is launching its own Texas Stock Exchange, and they're both going to be in Dallas, Texas. Cliff, let's listen to this, Doc, and then we're going to respond at what this is going to how this is going to take place here in Dallas, man. Texas out here flexing on people, man. Let's listen to this whole thing concerning the Texas Stock Exchange real fast, and then we'll dive into it. Here we go.
Well, plans have been in the works for several months now to create a Texas stock exchange, and now some new investors are getting involved, and they have names that you will recognize. Holden Weiland with the Dallas Business Journal is here with us today to talk more about this. Holden, thanks for being with us. This is going to be a really big deal, and it's got some big names attached to it. We were reading through your article today, and Charles Schwab would be one of those big names.
Yeah, they've got over $150 million in backing. CEO Jim Lee says this is the best capitalized stock exchange they'll ever file that has filed an application to date. Some of the big names that were previously announced included BlackRock, Citadel Securities, Fortress Investment Group, which is co-headquartered here in Dallas. But recently they unveiled a whole new list of more investors, the biggest one being Charles Schwab, which is, of course, headquartered right around the corner in Westlake.
Let me ask you about this. For people who haven't been following this closely, you hear a lot about the New York Stock Exchange. We just showed the numbers for that. The NASDAQ, we just showed numbers for that. Most people think of those two when they think of stocks, and they wonder, well, why do you need a whole new exchange, which would be called the Texas Stock Exchange and based here in Dallas? What is the reasoning behind this? What is the push behind this?
The big reason is the growth of Dallas as a financial hub. Wow. We've got the second biggest workforce of financial workers in the country. We've got billions of dollars in capital located here between family offices and private equity firms and other capital that have moved here. But the big reason is, you mentioned the NASDAQ and New York Stock Exchange. The number of public companies that are listed in the United States has declined over 40% in the last 25 years and increased 35% elsewhere in the world. Because of all the companies that are moving here and staying private, Jim Lee and the other backers of the Texas Stock Exchange see an opportunity to create a better exchange, an easier way for companies to go public, and that'll specifically help here in Dallas, where we've got so many companies moving here.
Yeah, that's really interesting. So, a lot of these companies are private companies right now. They would like to get out there and be public and sell shares, and people could invest in them and potentially make money off of those stocks. But they just can't get into the other two, or there's their onerous conditions in place to get into those. This one would be hard to get into as well. It'd have its own standards and all of that.
Sure.
But right now there's such an expense. It's expensive to go list on one of those other exchanges. Is this one supposed to take away some of that expense?
Yes. So I mean, it can cost upwards of 25 million, even 100 million to go public, and then it costs about 5 million to 25 million, depending on various factors, to just remain public per year. And some of that is because of some of the new regulations over the years, particularly some of the backers of the Texas Stock Exchange point to ESG standards. The Texas Stock Exchange, while still maintaining the highest standards according to the founders, won't be as much focused on ESG. It'll be more focused on the things related to actually operating and running your business and making sure you're capitalized. There'll still be a cost to be listed, but they don't expect it to be anywhere near as high as it would be to be on the NASDAQ or the New York Stock Exchange.
Cliff, what do you think about that, man? Because the ESG push. What do you think about that, man, when it comes to what they're talking about, man? What are your thoughts on that?
They sabotage themselves.
Jeez.
They put up, it's like California, same thing, that you came up with a standard, made everybody adhere to it.
Yes.
And now everybody left.
Yeah. Everybody left, man. This is, now let's listen to real quickly the impact that the Texas Stock Exchange is going to actually have on Dallas. And then we'll go over to a surprise one here in a second. Here we go.
I think some people might be surprised to hear when you just said a few moments ago, too, that this area is home to the second largest number of financial professionals in the country, only behind New York, which has a ton of them. So there's a lot of talent here, a lot of ability here, a lot of smarts here to put something like this together. There's been so much talk about Y'all Street, essentially, and bringing a lot of these companies to Texas, not only to list on an exchange, but then they would be based in Texas. What does this mean for, people who aren't necessarily interested in all the intricacies of setting up a big exchange like this and who might not necessarily be investing in a lot of these companies? How will this affect North Texas when something of this size gets going?
I mean, there's a lot of different reasons. One is jobs. I mean, just the stock exchange itself, while not going to be a huge employer, still probably going to have, about 100 people. And then you have all the ancillary businesses and companies that'll support it. There'll be services, and those companies hire people. But if you have all these companies going public and growing here, they're going to continue to hire people. If you have companies that are moving here, they're going to draw more investment, more people. And when those companies grow, they might spin off or have spin-offs, creates more jobs, more capital. So it's just going to be a flywheel and create a lot of investment here in Dallas.
Yeah, I was taking.
So Cliff, man, what I'm hearing concerning this is I'm hearing that what drove Texas to found its own stock exchange is the burden of the DEI, ESG type of stuff that was going on in New York. Am I right?
Right. Yep.
And you have Citadel, big capital partner, BlackRock, huge capital partner, Charles Schwab. I mean, these are some players that are behind this.
Yeah. Citadel owns. So Citadel basically is a company that owns the stock market. So anybody who trades stocks, I trade stocks. At one point in time, you had to pay like $5.99 a trade.
Yeah.
Right. Some of y'all older people, y'all know this.
Yeah.
It was $5.99 a trade and all that. So people didn't trade nearly as much.
Yeah.
Citadel came in and they started front running your trades. So when I click sell, they'll come in and take my order and bring it to the stock exchange, cash it out and send it back. They charge pennies. I mean, fractions of a penny to do that. And what they did was they paid the brokers, your Fidelities, your Charles Schwabs. They went to them and said, we'll pay you $50 million if we're allowed to front run all your orders. We'll pay you $50 million to front run our orders. And now you can tell your clients it's $0 to trade.
Dang.
The difference is they'll pay $50 million to Charles Schwab and make $150 million on the back end. Big company, massive
Boss
company.
move. Boss move. That's a boss move. My God. Now, Cliff, there's another stock exchange involved, and we know it. It's called the New York Stock Exchange, right, Cliff? That's what it's called. Bruh, after they heard this news, Cliff, about what's going on, New York Stock Exchange said, well, hold on, wait a minute. We need to get into this party too. Y'all, the New York Stock Exchange is actually relocating. First of all, the Chicago office is relocating from Chicago to Texas, Dallas, Texas, and rebranding itself as the NYSE Texas to compete with the Texas Stock Exchange. 2 stock exchanges in the same city. My God, let's listen to this, Cliff, man, and we're going to respond, Doc.
Exchange announced plans to launch New York Stock Exchange Texas.
It will be a fully electronic equities exchange headquartered in Dallas. The NYSE president calling Texas a market leader in fostering a pro-business atmosphere. It's reincorporating the NYSE Chicago with the move to the Lone Star State. Texas has the largest number of NYSE listings, more than any other state. Governor Greg Abbott saying Texas will now become the financial capital of America. The launch of the new exchange pending regulatory filings. In the meantime, though, NYSE Texas will be in direct competition with the Texas Stock Exchange, which filed its Form 1 registration with the U.S. Securities and Exchange Commission less than a month ago. The Texas Stock Exchange would be headquartered in Dallas. If the SEC approves the registration, the Texas SE plans to launch trading in early 2026.
So Cliff, man, I think Cliff has frozen a little bit, man. There you are. You back. Hold on 1 second. Cliff is freezing. He'll be right back, guys. This is real time, guys. As you can see, guys, you actually have. Let me get a little bigger here. We actually have right now. We have the Texas Stock Exchange, right? And it's launching in 2026. And then because of what's going on with the Texas Stock Exchange and the players behind it, guys, the New York Stock Exchange. There's Cliff. Here we go, Cliff back. Here we go, guys. Boom, there he is. Boom, there we go, Cliff. There we go. There we go. Let me get rid of this real fast. So as I was saying real fast, Cliff, man, is what we're seeing is because of the success and the players behind the Texas Stock Exchange, the New York Stock Exchange said, hold on, wait a minute. We got to get into this action right now because the bulk of the Fortune 500 companies are in Texas. 52 of them are in Texas, Cliff. And they're flocking to Texas because of why, Cliff? Why do you think so?
Man, it's business friendly environment. We got low taxes, low regulation.
Yes, sir.
And we ain't trying to change it.
Ain't at all. And also, you said something, Cliff, before when you were talking before the show. If you were to go public, or if you're already public on the New York Stock Exchange in New York, right, which is already a high tax state, what are they forcing you to abide by when it comes to your board and things of that nature in New York?
Oh man, they basically have different initiatives where you have to have so many demographic groups on your board. You have to adhere to what is it called? Like you have to be eco-friendly, right, with how you're doing your business and how you're running it. And then the people who are deciding what grade you get, they're biased because there's plenty of companies that they should be eco-friendly and they rate them bad because they don't like the CEO. So, and if you come to Dallas, what they're saying is we don't have none of that. Run your company how you want to run your company. We're going to get out of your way, low regulation. And plus, if you're looking to expand, not only do we have Dallas, we have Houston, San Antonio, Austin, El Paso, Galveston, Corpus Christi. We growing.
Wow. Yeah. So basically, guys, let me give you the government side of this thing real quickly. Each state has a secretary of state, right? Each state does. That's really the business development head for each state. New York has one. Texas has one. I gotta say it. The Texas Secretary of State is kicking the living hell out of the Texas, out of the New York State Secretary of State right now, because they are actively recruiting businesses out of New York into Texas, but they've also recruited the New York Stock Exchange itself, although it be in Chicago. They actually recruited them out of Chicago into Dallas. They are kicking the living snot out of the New York State Secretary of State. This is business development 101. And let me ask you these questions, guys. You let us know in the chat. Which option, which state would you be more apropos to launch your company in? A low tax, right, environment, business friendly environment, right, with limited regulations, or a high tax, high regulations, high permitting process state? Which one, Cliff, would you be more apropos to launch your company in?
Low regulation. All day.
All day. And you said it best. Dallas, Houston, San Antonio, Galveston, El Paso. I mean, you can name the cities.
We have a port too. We got a port. So we got stuff coming off in Houston and Galveston. So New York fumbled it, and Texas took advantage of it. So let's be honest. The powerhouses was Silicon Valley, out in California, and the New York Stock Exchange out in New York.
Yes.
Now you have the Texas Stock Exchange in Dallas.
Yes.
And you brought in the headquarters from Silicon Valley out in Houston.
Yes.
That's become the new tech kings out here. So now you have Houston, Silicon Valley, Dallas Stock Exchange, Texas is killing it.
And also, guys, here's a little bit of a plus. When it comes to Bitcoin, guess what city is actually becoming the Bitcoin capital of the world, Cliff?
Who's that?
Austin, Texas.
Oh, really? Okay. I know Miami's trying to push it hard.
No, Austin is.
And let me give you a little bit of info. It's wild what they're doing with Bitcoin. Genius. Texas actually did something that was very genius.
Yes.
When it comes to the power lines, we get all these different companies that generate power, they send it to the grid, and and then Texas has a way of distributing it.
Yes.
Cool. You send it out, distribute it to everybody's house. What happens, Dale, when you have more power coming into the system than is being distributed out? What happens to that excess power? Normally, they just disperse it. It's just excess power being generated because they generate different loads at different times.
Sure.
Texas is genius where they said, why are we letting that excess power go? They started doing Bitcoin mining and excess flow of electricity. Then when they get the excess, it'll push it to their miners that will generate additional income for the state of Texas, make money mining, and then turn it off when they don't have that excess.
Damn.
Genius.
Damn. Man, I gotta give it to Governor Abbott, Lieutenant Governor Dan Patrick, the Secretary of State, the Comptroller of Texas, man. Texas is flexing on everybody right now. They killing the game when it comes to big business. And I'll even say small, mid-size, and big business. Come on down to Texas, baby. We want you down here, baby. Come on down. We got the power for you. Now we have both stocks exchange for you guys. And also, Cliff, now, quick question. When it comes to access to capital, right? And the real estate market, because again, jobs, capital flowing, how will this impact the Dallas-Fort Worth Metroplex, Texas, and the nation?
I mean, more competition is always best. So you're going to have more efficiency in the market. You're going to actually have the New York Stock, all these different exchanges now that you actually have options. If you're bringing something to market, now is the best time because the Texas Stock Exchange, they want people. So they're going to have lower fees, lower costs to come on board. So that's going to help stock exchanges everywhere become more efficient. For Dallas, the real estate, because all those servers and everybody's working on that exchange, they're going to come in house. And another part is so going back to Citadel.
Yep.
As I said earlier, they buy your orders and send them back for like fractions of a penny.
Yes.
So how do they do that? They have to have their servers right next to the servers of any stock exchange, which means they're going to be buying real estate and having server farms near downtown Dallas where those servers are going to be. Citadel is going to have to not want to have to invest billions of dollars in servers and ground transportation to be able to support those exchanges. So you got billions coming in. It's going to Man, Dallas is going to go. I mean, you could see a 15% growth in the next 24, 36 months.
And again, he said 24, 30. That's 2 to 3 years, guys.
Right.
Let's go a little deeper, Cliff. Guys, Citadel, from a real estate investor's standpoint, is also an investor in real estate. They lend on real estate, right? So if they're investing billions of dollars into these servers, knowing that it's going to drive up 15 to 20% growth, right? In the next 24 to 36 months, guys. Watch this, guys. They're also going to begin to lend out cheaper debt, right? For those real estate investors because they need more housing in the DFW Metroplex. So if you're in Keller, if you're in Haltom City, Dallas, DeSoto, Cedar Hill, Grand Prairie, let's go north, Plano, McKinney, Princeton, Melissa, right? Right? I mean, keep it going, guys. Carrollton, Farmers Branch, Irving, Capel. Guys. Let me see, Waxahachie. Let's go to Mesquite, Forney. Look at all of these towns. Texas is going to kill it. They're going to kill it.
I think by 2030, roughly in 10 years, something like that, Dallas is going to grow another 1 million people.
Yes. Now we got a question from my man Tito on Instagram. He said, now will that turn Texas blue? I would say no, because of the fact that people are going to like the environment that attracted them to the state of Texas. They're going to like that environment, right? So, and it's going to really be apropos for the voters to be able to say, okay, you see these sensible regulations and permits and laws from a state, county, and city standpoint. Hey, you better go out there, guys, and talk to them about this. If you're behind, to go do it, because these type of low regulations, low taxes is attracting businesses with capital that invest that capital, that generate more jobs, which generate more capital that flows throughout the citizenry, which then gets them to actually acquire more properties. Money is flowing through banks, money is flowing through these jobs, money is flowing through employees. Do you see how this actually works? It's simple, but you have to get off your behind and go out and tell the people. Cliff, you agree or disagree?
Man, it's hard to say. I think Texas is going to go more purple. I think it's going to go more purple because I think, man, I'm just taking a logical look at this, right?
Okay.
California was Republican at one point because they had Arnold Schwarzenegger. He was running as a Republican.
Yeah.
So the question is what, when you look at Texas and you look at the voter map, what do you see as the blue areas? The cities.
Well,
what areas are growing the fastest? The cities.
Not necessarily though, because in this election cycle, you understand that Austin was blue,
right?
Harris County was blue, right? And that was it. That was it. It was red, Cliff. It was red, and it was red. The Rio Grande Valley, Bexar County,
right.
That turned from blue to red. I mean, like blood red. It was crazy in 2024. Now, can that change? Yes, it can.
It can. Now, we also have to remember the census is coming up.
Yes.
And that is going to make a huge adjustment because I think someone had done an analysis and they said if they actually corrected for a bunch of mistakes, there should be another 8 to 10 electoral votes going to I think Texas, right? Because Texas is actually bigger than they say because they haven't done it since we've had this influx, right?
Correct.
So it's possible. I mean, Dale could be right. I think it's probably going to be a little bit more purple, but I don't think. I think the opportunity and why everybody came here, they're going to continue to back the people who made this possible to stay in office. I don't think they want to see it change. So if you're going to invest billions of dollars, you're going to back the people who made that happen.
I like you said that, Cliff, because if you look at Silicon Valley, the reason Silicon Valley was so powerful is because all the money was there. And so those laws benefited that money that was there. Well, now let's bring that same train of thought down to Texas. If these type of regulations and laws attracted this type of capital to where two stock exchanges are launched at the exact same time and competing against one another for businesses, guys, in a low regulation, low tax area, guys, you better believe there's going to be a lot of sway saying, hey, if you like this gravy train, you better keep this going.
100%. Yeah. Man, and when things are flowing, you don't stop it. You don't stop it. You're talking about big business who making smart decisions. They understand they're making a long-term bet that this is how things are going to go. And they know too, because I've looked at the demographics.
Yeah.
Dallas is going to continue to grow for the foreseeable future. I mean, and more going to see it because I mean, if you look at us compared to the other big cities, we have so much more opportunity. Who doesn't want to be in a top 10 metro that's growing?
Correct. Man, it's Cliff, man. Guys, this is huge news. Keep your eyes on Dallas, Texas, Dallas, Fort Worth, because really Dallas and Fort Worth are kind of together, to be honest with you. But watch. Keep your eyes on Dallas, Fort Worth, Texas. You're going to begin to see a lot of money flowing that way, guys. This is going to be legendary. It really is, Cliff. Hi, my name is Liddell Buggs. Mastering the strategy of locating distressed properties has allowed for me to own about $35 million worth of real estate currently right now. We're talking about new construction, single-family residences, commercial properties, and apartment complex. You name it, I own it. Now, I know you're asking, what does this got to do with you? I'm glad you actually asked. One of the most common questions that I receive when it comes to real estate investing is that they say, Liddell, what is the best strategy I should use when it comes to executing a good investment strategy in real estate? Should I buy and hold? Should I buy and flip? Or should I do a rental scenario? My answer to that question is, why not do all three? But the good thing about it is the investor that masters the art of locating distressed properties will know exactly how and what strategy is the most wisest in that situation. That's the key to this whole thing. If you wanted to know how successful real estate investors make money with their acquired real estate and not when they sell it, click on the link below or swipe up and download our free ebook, Distressed Property Investing. The blueprint is in the ebook. Stay blessed, holler at your partner, and download the ebook today. All right, guys, we're back, Cliff. Now, Cliff, you want to say something again before we went to our little commercial break. What were you about to say?
Oh no, just continue on with our conversation, man. Just Dallas is blowing up. It's going to continue to grow. If you're trying to invest, Dallas is a great area. It's just hard to find. It's so difficult. It's hard to find deals now. It's a deal in Dallas, and it's been like this for a couple of years. Dale, you know, getting a deal in Dallas is getting it like 60 cents on the dollar, 50 or 70 cents on the dollar. It used to be 50, 40. Can't get those no more. They don't exist.
Not at all, man. This is going to be really, really cool, guys. Now, guys, let's transfer over, guys, into another state, the state of Florida, all right? Specifically, the city of Miami. Miami, guys, I've been there. Cliff and I, we've been there before. Gorgeous city. My God. I mean, I almost decided to stay in Florida just to stay in Miami because it was that damn pretty. You know what I'm saying? But guys, there's a crisis going on in Miami from a rental standpoint as well as from a retail standpoint. And we're going to hear about this real quickly, guys. So let's dive into what's going on in Miami, guys, because it's it's not good, Cliff. And you're going to be surprised. We're going to be surprised at how this is actually happening. Oh, wait a minute. Where did it go? Oh, here we go. But Cliff, let's go and dive into this real quickly, man, and see what's going on in Miami. Here we go.
Entry-level homes in Miami are going extinct.
Wow.
There's a Wall Street Journal story, and I have some thoughts on this. But I'm going to go to Mr. Ellsworth first because he's a biz doc. So
it's true.
Entry-level homes in Miami are going extinct as single-family prices skyrocket. The number of sales under $500,000 dropping. Ready? 79.6% from 2019 to 2024.
Damn.
Vinny, let me say this to you one more time. Folks, please listen to this. The number of houses under the price of $500,000 dropped 80%.
Jesus.
There's 80% fewer homes under $500,000 in 5 years.
Wow.
We're not talking 20 years, 5 years, okay? Anna Bozovic, all right, founder of Analytics Miami, explained the market below 500,000 is going extinct. It's kind of shocking. In December 2019, there were 3,518 single-family homes listed under 500,000. But by December of 2024, it went from 3,518 to 641.
Wow.
Rising home values, high land prices, and construction costs have pushed most of these homes into higher price tiers, with the median sale price hitting $675 into December, up 78% from 2019. Rob, is that active listings right now? Can you go up a little bit to see it? Because I can't see the cameras. No, the other way. The other way, Rob. Yeah. So that's active listings from 2015 to today in Miami. Wow. Is that really what that is? And can you go into homes sold? Go a little bit lower on the next one. Homes sold annually. This is specific to Miami. What was it in 2015, Rob?
12,820, and today it is 2,229.
So
I'm moving to Miami.
Luxury real estate has surged with a number of single-family home sales above $10 million, increasing 248%. So $10 million homes in Miami have gone up 250% from 2019 to 2020, and Miami's top 1% home threshold jumping from $3.5 million to $10 million, 3x. Bozovic noted these price points didn't exist pre-COVID. The sheer appetite is completely different reality. Notable sales including hedge fund Ken Griffin, record-breaking $100 million purchase, Bezos spending $234 million assembling a compound on Indian Creek, and soccer star David Beckham and his wife, Victoria Beckham, buying a $72 million home mansion that set off a market frenzy. Thomas.
So here's what happened. Three things happen, and then there's a solution, there's a way out. The first thing is the number of listings are down historically. Why is that? Because a lot of people have those 2 to 4% mortgages, and they don't want to sell their houses.
Correct.
So the actual supply of houses is down. Then we printed money. Biden printed money, which artificially increased the price of assets. Because there was more money, and price of assets went up artificially, but it stayed there because of this money supply. And then you have demand. People moving to Florida. Listen to those names. They're not in New York. Ken Griffin, the Beckhams, all those folks, the Bezos moved from California, down here. So you have incredible demand. So you have inventory is down, demand is up, people moving here for the inventory that is available. So, and the money, you printed money, so the price went up. So what do we need? We need more building in the outlying areas so they have more family areas. Except on the east side of Miami, there's this thing that prevents building called the Atlantic Ocean. And on the west side of Miami, there's a thing that prevents building called the Everglades.
Correct.
So Miami is kind of out of space.
Correct.
So it's kind of part of urban planning as industrial areas and things get repurposed to encourage developers to give them incentives to build, maybe more condos and low-income housing so that the workers have a place to live. That's a good thing. And if you build enough of them, then you're going to have some price moderation.
Yeah.
And if the interest rates on mortgages come down, you're going to have people want to sell existing houses.
Yeah.
But Miami's price has gone up, and the overall net price of the area is probably not going to go down anytime soon.
So what's the solution, Tom?
Well, the solution is slow. It's like Miami is going to be an expensive place.
I'm going to give you a solution. You ready? Here's a solution. May I? Okay. Here's what I think the solution is. I think exactly what Miami is going through is what happened to California and multiple cities where people with money showed up.
Yeah.
And then guess what? You don't have a choice.
Yeah.
That's what the market's going to pay for that community.
Mm-hmm.
And you're going to have to pay it. You don't want it?
Correct.
Don't worry about it. Move out. So if I'm long in any city in the state of Florida,
Listen to these
you know what
cities.
I'm long on? Fort Lauderdale.
Yes.
Okay?
Yes.
Fort Lauderdale. I am long on Fort Lauderdale. Why?
Yes.
Because you got Palm Beach, which is a different climate.
Yep.
Okay. You got Boca
Raton.
Very different climate.
Stewart,
Boca's a
Florida.
great area. Boca could be the Glendale
Sure
of
could.
California. Meaning,
Sure
if
could.
Armenians want to move to a city that reminds them of Glendale, go to Boca Raton. There's a Armenian Catholic church. It's a great place to go to. Boca would be a great place for Persians, Iranians, Armenians, Assyrians to move to. It's not like as if I'm lobbying, but Arek, Bolorit Arek. Talacha, temun to Boca, Kush Boca.
I couldn't agree more.
Yeah, Boro Boca Raton. It's a great city, right? But I think Fort Lauderdale is going to have the next explosive growth the next 10 to 20 years. Why do I think that? It's because I don't think it's going to slow down of people moving to Florida. I don't think that's slowing down.
No,
I think where they slow down to is going to be Miami because it's way too expensive. And I also think a lot of people are going to sell their homes in Miami and move up to Fort Lauderdale with that additional equity that they made with the market that's willing to go there. If they want to pay you for a big check for the place, do it. If not.
So Cliff, man, what are your thoughts about process concerning what's going on in Miami? What are your thoughts on that one?
I think they're having the same problem every other city has.
Yes.
Right? You have too much demand. I mean, the funny thing is that we don't have to guess. We already know what happens.
Correct.
You look at this happens all over the world, right?
Yeah.
I mean, in the United States, it's New York.
Yeah.
It's LA.
Yeah.
Around the world, you have Paris, Luxembourg, right? You have Hong Kong. Anytime you have these big cities and they get influxed, prices skyrocket.
Correct.
It's just part of it. It's just it's demand dynamics. There's not much you can really do about it except if you can afford it. The hard part is what really drives people out is not the rising prices, it's the taxes.
Yes.
Taxes go up. Now I've seen people where they've been in their home 7 years. That's it, 7 years, and their taxes have doubled.
Yes.
So
yes.
I think what you're going to start seeing is people start going to me. In Dallas, I see the east side. It seems like in Miami, they don't really have an option. So Fort Lauderdale, I'd be long Fort Lauderdale because it's you can still buy it, right? At a good price.
Yeah.
And it's a natural place for people to flow to that's still cheap. Like in Dallas, it's Fort Worth.
I agree. I agree with what he said. Fort Lauderdale. I've been in before. Gorgeous city. Boca Raton. He's spot on. Stewart, Florida. I used to own a home in Hobe Sound, Florida. That's the property that you and I renovated, right? And we made a nice amount on that property. My God. So, my God. But at the exact same time, you have Hobe Sound. You have Boca Raton. You have Palm Beach. You have Stewart. You have Fort Lauderdale. Miami is more of the southern part. So Miami is the most well-known place out there, but I agree with it, Fort Lauderdale. And to be honest with you guys, do you know the luxury homes in Miami as well also? You know there's a lot of sales out there below wholesale of people just giving up properties, Cliff, because they can't afford it no more because of the taxes and the inflation. So again, guys, guys, let me give you guys a little tip, right? There's a way for you to get a list of distressed properties in your city, county, really city and county, by just calling down to your city and asking for the code violations division. And they will give you that list most of the time for free. Some cities may charge a little bit of a small fee, but you talk $100, $50 maybe. But typically you get it for free. Now, why would a city do that? Because cities don't make a product or service. What they do is they make their money on what? Taxes. That's what they make their money on. So if a property is sitting there vacant, there's no warm body in that building and or home paying a tax bill. So someone like myself or Cliff could come in and say, hey, what properties do you actually have in this area of town that have code violations? Now, what code violations? High grass, boards over the windows, fence violations, painting violations. There's a ton of violations that each of these apartment complexes sometimes, as well as commercial, as well as single family residences, they give that list. Then you can then begin to market to the home to the owners of those properties and negotiate a deal. You've gotten a list of properties that you can actually negotiate with the right skill to buy a distressed property below wholesale. Cliff, you agree or disagree, big dog?
Yeah, if you have the skill, yeah, it's man, it's a good skill to have because you can do multiple things with it, right? If you're trying to do short term flips, more risky, long term rentals, you can buy, get in, and make some money.
You can make a lot of money if you know what you are doing. If you know what you are doing, Cliff, man, Cliff, real quickly as we could begin to conclude, when it came to you investing in real estate, right? Did you have somebody that could walk with you step by step on what to do?
No.
So how did you learn?
Trial and error.
So it's safe to say you didn't make money on every single deal. You lost a lot of money on some deals as well. Am I right?
Yeah. Mm-hmm.
Gotcha. Now, because of those losses, which is really learning opportunities, has that made you a better negotiator, an investor, and an appraiser?
Yeah, because I know both sides of what can happen on a real estate deal.
Gotcha. Now, if you had access to somebody that could give you access to a skill like locating distressed property investing, and they want to give it to you for free, would you take it?
Oh yeah.
Why?
Man, it's free. It's an opportunity to learn without any cost.
Gotcha. So, guys, the technique that I talked about concerning getting a list of distressed properties from your city or county, and also you can just have works in the county as well, guys, because counties are run by county judges, which is just the mayor of the county. One of my good friends is the mayor of my county. I know him specifically. I know him personally. They run it just like a city. So that's why I said city and counties. Guys, we talk about this skill in our free ebook called Distressed Property Investing and other skills as well. This is a book that me and Cliff put together. These are notes from an actual masterclass that we did, and we gave to those that actually went to the masterclass. And people use this thing like clockwork. We want to give it away to you for free. Now, why are we doing this for? We don't want to give you no damn course. We want to be able to give you the information so we can get the bag together. So if we teach you how to locate a distressed property, which is taught in this ebook, it's for free. Vet the deal, make sure it's a good deal, structure the deal the right way. If the deal makes sense, we will fund the deal for you and make a profit split. Cliff, if you had that type of offer on the table, what would you do?
Oh yeah, easy. If you can have someone else come in, make sure you're not making the mistakes so that it ends up being a profitable deal all day.
All day, got real simple, guys. And if you, all you gotta do, guys, is click on the QR code here on the screen, or click on the description below, and there's a link there as well. Also, but if you can do none of those things at all, don't you worry. Direct message me the word real estate, and my team will get you this exact link to you today. You can go download this for free. Don't want nothing from you. Want to get you the information. Is that simple, guys? All right. And Cliff man, I want to let you guys know Cliff is also a licensed appraiser, right? He is an appraiser by trade. Now, Cliff, you have the ability to not only appraise here locally, but now you can go statewide and also and also nationally. Am I right?
Yeah. So right now we're in Dallas, in Houston. So if you have any appraising, even consulting, we do some consulting work across the country.
Mm-hmm.
So we'll have opportunities to help people who are right now. We have someone who's doing a subdivision. We're walking them through that, helping them understand what the valuation is, how they want to set up different parts of doing that build out, if they want to do a subdivide it. So anything like that in terms of consulting, we can do across the country. Appraising right now, we're focused mainly in Dallas and Houston. We could expand out at some point in time, but yeah, if you're in Dallas or Houston, go to the website, give us a call, and we can go ahead and get you set up.
Real simple, guys. I don't know about you, to have access to a licensed appraiser, to look at my deal? That is, Cliff, is that normal?
No.
Not at all. At all. And to be able to have someone to say, and Cliff has a general contracting background as well, also to say, hey, you may want to do this to maybe get this value, right? So he can also counsel you on how to renovate your property the correct way to get the maximum value, so to speak. Now it's going to be driven by the market value itself. So don't get it twisted now. But at the exact same time, to get that type of counsel is life changing. Cliff, you agree, man? You disagree?
Oh yeah, definitely. Because you just get insights, right? You're going to learn things you wouldn't learn on your own, or something you would have to go through a lot of pain and aggravation to learn. We could, basically do a shortcut for you and get you right to the point.
Gotcha. Now to kind of remind everybody, just go to hunterappraisal.com. It's right there on the screen. Hunterappraisal.com. Write it down, burn it on your brain. It's right there. All right. It's right there, guys. All right. And lastly, guys, again, if you guys want the free ebook, guys, DM me the word real estate for the free ebook, or you are welcome to also real quickly scan on this QR code or click on the link below to get the free ebook. It is free, guys, and it's literally a book. Here it is. It's right here. It's right here. It's literally right here. It's the hard copy of it. It's right here. Right here. We got it. All right. So, but guys, man, that's all I have for that. That's all I had. Cliff, if you want to say anything, man, before we get off, big dog.
Man, you already know. You're one deal away. Man, hit us up. Take the next steps. See if we can get you your next house.
Yes, sir, man. You know how we ended every team's time, guys. Before you leave, while you can, you see that thing, baby. Happy Valentine's Day to you. Man, go love on your boo.
Yeah,
all right, man.
Definitely.
Love on your boo, man. Take the picture for your mom and them, guys. Holla about it. God bless you guys. See you next time, guys. All right, y'all. Peace.
Walk me through everything, but let's start from the beginning. How'd you get into this space?
Well, when I was 17 years old, my Uncle Gary, who still lives to this day, introduced me to a concept called passive income.
Okay.
And I said, oh, Uncle, what's that?
Yeah.
He said, something that you do one time, but you get paid over and over again. I'm like, why am I trying to go to college? I want to know how to do that. Gotcha. And so while I was in college, I began to look at business models that generated passive or residual income. One of them was real estate, because everybody and their mama actually had it, from Robert Kraft, Jerry Jones, all the billionaires actually had real estate in their portfolio. So I began buying real estate while I was in college. The first deal that I did, I made $3,500. And in college, that's big time. In college, you broke.
For sure.
College.
For sure.
Then I went from $3,500 to $10,000 to $26,000, and now $35 million worth of real estate. For me, business is always about solving someone's problem. Whenever you're buying a real estate transaction, the one thing I look at is, what's the pain point? Why you want to sell for? And typically, I like buying properties below wholesale. I never buy properties at retail. That didn't make sense to me at all, because I'm planning for the worst case scenario. Each and every deal that I actually acquire, I actually take home cash when I actually acquire it. Wow. Every single time.
If you wanted to know how successful real estate investors make money when they acquire real estate and not when they sell it, click on the link below or swipe up and download our free ebook, Distressed Property Investing. The blueprint is in the ebook. Stay blessed, holla at your partner, and download the ebook today.
Bless God, give thanks. Bless God, give thanks. Bless God, give thanks.